Thanks for clicking on Bank Holiday, which was also known as the Emergency Banking Act at the time. I will be telling you all about it. First off, I will be giving you some background information. The bank holiday was an event during the 1930s, and during this time, it was a time of people losing their trust in banks. People would put a lot of money into banks, but when it came time for them to take the money out, they were not getting everything back. This was caused from the 1929 market crash, when the banks lost money and now were basically in debt with everyone that put money into the banks. Franklin Roosevelt was the man who was getting all the problems sent to him as he was the president at the time. This was a huge part in the New Deal and strengthening the banking system in order to help the economy. In dealing with this problem, he chose to shut down the banks for 4 days in order to restore everyone's confidence in the banking system. During this time period, he implemented the FDIC, which stands for Federal Deposit Insurance Corporation. This helped to make a more permanent solution. With the corporation, people regain their confidence. In this, you can deposit a certain amount into the bank that will always be protected. You are unable to put all of your money in the bank since they still need a certain amount to give loans. Some things that restrict the amount of money that is able to be put in the bank is that you can only put in up to $250,000 in this per bank. If you have not seen how this has aided the economy in many ways, I will give you an overview. After the market crash, the banks lost a lot of money and were unable to give it back when people came to get it. This caused many people to lose all of their confidence in the banking system, which made people take their money out and thus caused a huge problem. The decision of people to take their money out of the banks was the start of a chain of bad events. When money is taken out of the bank, they are unable to do their jobs and give loans to people. FDR was faced with a huge problem when this happened, so his choice was to shut down the banks and come up with the idea of shutting down the banks for 4 days and making a long-term solution of putting insurance on the money that is put into banks. Once this was put into place, the day that the banks reopened, there was a long line of people waiting outside to put their